Hi everyone, let's go over my bullish and bearish Elliott Wave scenarios on Bitcoin, starting on the 4-hour chart with the bullish scenario where we're looking for a 5-wave impulsive structure to the upside where preferably wave 4 is finished and we're working on a wave 5 up. The common target area for your wave 4 has not been reached, as you can see in this particular case, as that is the 236 to the 05, 50.4k to 47.4k, while a less common target is the 146 to the 236, 51.4k to 50.3k. However, preferably this is the low because of time. The vertical lines on the chart are fib times, taken from the high to the low of 2 to the high of 3, comparing 2 in time with wave 4 in time. Wave 4 preferably finishes between the 1 and the 5 fib time, but if we make another low, it's going to be a low that is going to be made after the 5 or even the 6 fib time, making wave 4 very, very long compared to 2, and that lowers the probabilities that it is still a wave 4. If, however, we do at least consider the case where we make a wave 4 over here, the count is changing slightly. Instead of this wave 3 finishing here, we now finish a green 3 up here with then a 5 in blue finished here. All the lower degree structures are moving one structure to the right side. Just to compare, here you can see 1, 2, 1, 2, 3, 4, 5, 4, 5, finishing blue 3, 4, 5, finishing green 3. If we go to this scenario here, then you can see 1, 2, 1, 2, 3, 4, 5, 4, 5, finishing blue 3, blue 4, blue 5, and finish green 3. However, what you can see is that I have a white box around this range, because now this range is a little bit in the middle of nowhere. This has to be a wave 4, but that then means we also need a wave 2 somewhere here. And on the 4-hour time frame, you can see that we do have a range here, but we can't really see a nice wave 2 here on the 4-hour time frame. Only if I go to the 1-hour time frame can we start to see some ranging structures over here at the low, right? As you can see, compared to this wave 4. So this has to be your wave 2, this has to be your wave 4. However, as this move happened, you can also see we have ranges over here. And the probabilities at the moment are higher that the wave 2s that we have here are matching wave 4s over there, instead of connecting a wave 2 over here with this range in a wave 4. I know this is a lot of detail, but this is very important with regards to the probabilities of having a bounce if price moves to the downside here, right? Now, something that is interesting is that in that bullish scenario, right, if we're looking for 4 to end and a wave 5 to the upside, we're looking for price to fill the weekly gap here, right? On the weekly time frame, we have a bit of a gap. It's not yet filled, 53.3k. However, this gap is a very important resistance. just like over here, price bounced inside the weekly gap, actually also did not fill it, at least not to the T here, 38.454 on my chart, right? But it did act as support. So the same can happen over here, but the other way around. Another weekly gap that we have above us is the one over here, 59.5k to 62.3k. But of course, that means we first have to pass this weekly gap. And also the 53.3k level is also the high of the monthly gap. So on the monthly time frame, we have tested this gap over here once, big rejection, twice, little rejection, and now we are ranging inside this monthly gap. And also here, we didn't actually yet fill the 53.3k high of the monthly gap, which is interesting in that bullish scenario. Now in the bullish scenario, however, as we are looking for preferably the low to be in and continuation to the upside, this would be the scenario that you're going to be looking for. 1, 2, 3, 4, 5, finishing a wave 1, A, B, C flat structure in a wave 2, and continuation up in a wave 3. However, you do not want to hit the 886 because the 886 is rare for a wave 2 and common for a wave B or a wave X, meaning the moment the 886 is touched over here, taken from the low to the high of wave 1, probabilities increase to take these lows sooner or later, which would add probabilities to price moving to the downside. Now we do have some support to the downside here. This is very important support, the blue box between 49.1k and 49.8k. Below this, we only have a daily naked point of control here pretty much at 47.325. To the upside, we have some resistance, the daily naked point of control, 51650, and then this box here, 52.2k to 52.4k. Then the monthly gap, we spoke about that one, and then above this, we have 56.8k to 57.3k. Now, how do we then end a corrective structure here if we are looking for the bullish scenario 3, 4 ending in a wave 5 to the upside? Well, Stuba in the group came up with this scenario over here, and I think it's a very nice scenario. It's very well thought of. Pretty sure Stuba had a nice little bit of thinking to come up with this scenario where he has a WX and a wave Y, and in wave Y he's looking for a zigzag ABC with inside wave B a flat A, B, C. It's a running flat, as you can see, finishing therefore this wave 4. And you want to see a continuation to the upside in the diagonal 1, 2, and then continuation to the upside, right? That's pretty much the only way you can end a corrective structure over here. But a running flat, as we all know, and Stuba very much as well, as he's a great Elliott Wave counter, is a rare structure, right? So the fact that then we have to end a structure here in a WXY with inside Y a zigzag A, B, C, right? And then inside B a running flat and then a wave A, B, C, right, is not great probabilities because a running flat is generally very, very rare. So that is something we have to take into account. But to make life easy, if price hits the 886, then the probabilities are higher to move to the downside and look for support. On the 4-hour time frame, the bearish scenario here is that we are looking for a flat structure, 3 wave A, B, and a wave C, or a finished impulse, which is this scenario over here. 1, 2, 3, 4, 5. We're already finished here, and we're going to be looking for a bigger corrective structure to the downside. As you can see, the move to the upside with the subdegree counts works here, right? We don't have an empty range or a range in the middle of nowhere. Every range has now a function. They're all wave 4s as well. And then we have our wave 5 ending at the high. That is the invalidation, of course, for this scenario. We want to see impulsive continuation to the downside, while in a flat structure, we are looking for a 3, ABC, ABC, and then a 5-wave move to the downside in a bigger wave C, 1, 2, 3, 4, 5, for much lower prices to come. This is then the ABC to the upside, A, B, and then a wave C to the upside here. However, we have the same problem as with this scenario, because here we are then looking for wave 1, 2, 3, 4, 5, right? And then inside this wave 3, we have our 1, 2, 3, 4, 5, and then inside this wave 3 subdegree 1, 2, 3, 4, 5. So then again, this range over here is a little bit of a problem, and that is, again, it's not really preferred. It's just not as nice, right? If we look at the CVD divergences, then we have the bigger bullish CVD divergences here, and also locally we have bullish CVD divergences. However, what you want to see is price invalidating bearish CVD divergences. Now, all of these bearish CVD divergences here already played out. However, if with every little bounce we get bearish CVD, bearish CVD, bearish CVD, that has a higher probability of playing out compared to the bullish one. So keep an eye on the 3-minute to 5-minute CVD divergences, as this of course is not really what you want to see if you're looking for a move to the upside. So if we then look at the probabilities of the different scenarios, then on the 4-hour time frame, probabilities at the moment are neutral. For the bullish scenario, preferably your low is in over here, even though it is in a rare target area for a wave 4, being the 146 to the 236. But it only looks possible to finish a wave 4 here with a running flat in the middle, which is not common, right? It's a rare structure, and that is something we have to take into account. However, only if price hits the local 886 do the probabilities increase for a move to the downside, as locally we are then looking for a wave 1, 2, and then an impulsive wave 3, and the 886 is a rare target for a wave 2. We do not want to hit that 886 locally if you're looking for a move to the upside. We do have the bigger bullish CVD divergences here, but we have to keep in mind the local 3 to 5 minute bearish CVD divergences that are building every time with every little bounce, and these are more important. So therefore, only if price can invalidate those bearish CVD divergences, flip some resistance areas into support, can I be looking for a continuation to the upside and fill the monthly gap as well as the weekly gap. So there's pretty much something to say for both sides. Therefore, I prefer to remain patient here. Let price show me the way. Hit the 886. I'm going to be looking for price to move to the downside to support that I mentioned earlier. Or if we can flip some resistance areas into support, like the daily naked point of control and this area over here at 52.3k, the target box, yeah, then I could be looking for a move to the upside as long as price hasn't taken this low before then moving to the upside. Also, if we move up, we want to see a wave 3 to the upside here, and a 1, 2, and then a wave 3. So we want to see volume coming in as well. I hope that this video was helpful or valuable to you. Please check out the most recent educational video I've made about the best trading indicator you can use in my opinion, which is the CVD. And for now, thanks for watching and subscribing, and I'd like to see you at the next one. Bye bye.